Yeah, good everyone. So I want to show us on how to place a trade. Okay, how to place a trade. Now I want to use the BtcDana as an example. Okay, so I want to use it as an example to show us on how to place a trade. Okay, so now on BtcDana, this is the this is their homepage. Okay, on the app. So you go to markets. If you look down, okay, if you look down here, you see this is market. Okay, you click on the market. Okay, you click on market. So you now on the market, there's a list there. You can see you have forex, we have crypto, we have metals, we have indices, we have stocks, and so on. So in forex will show you various symbols of currencies in the market. Likewise, crypto will also show you also all the cryptos in the market that you can trade on, and metals will show you the gold, show you silver, and others. They have few here. Okay, and the indices, the same thing will show you. There are stocks there. Then the stocks will show you stocks that is available in the BtcDana platform. Okay, so we are interested in the forex for now. So we want to place a trade. So let's say we go to we can use any currency we want to. We can use any currency we feel like using. So at this point, let's say we want to use USD against Japanese yen. Okay, USD against Japanese yen. When you click on it, it will bring you to this portion. Okay, it will bring you to this portion. So now that you are here, okay, we want to place a trade now. So remember, we go to the market. From market, we click the one we want to use, the USD and JPY. After analyzing, maybe using trading view and all that, you've seen your entry point. Okay, so this is where we are now. So what you do, you go down. You can see if you check down, you will see trading, you will see community, you will see buy, you will see sell. So we want to, let's say we want to buy. Okay, or okay, let's say we want to buy. Okay, when you want to buy, we click on buy. Okay, now we have position, we have pending orders. Let's leave pending. I want to take a position. After position, the next thing you will see is volume. Ladies and gentlemen, please pay attention. This volume represents a lot. Okay, this volume will determine how much you will make in the market. It also goes along with how much you have deposited. Okay, how much you have deposited determines how much you can make at a particular trade. Okay, so and all of them work together. The amount you deposited and the volume. Okay, the volume here we call it lot size. It's also called lot size. Okay, so we have 0.01 is the 0.01 is the lowest, is the minimum, is the lowest. Okay, now move to 0.02, 0.03, 0.04, 0.10, 0.15, like that, 0.20, 0.030, 40, 50, 99, all that. Okay, before now 0.99, the next one is 1. Okay, the next one is 0.1, sorry, the next one is 0.1. So from 0.1 it move like that to 10 to now get to 1. Okay, 1 is the okay, we go to 1. Okay, till 5 is the highest, if I'm not mistaken. Okay, so that is that. So before you can trade with all these you need to have your money, the money deposited determines how much you make, like I said. And also the commodity you're trading with or about to trade on also determines how much you will make also. Okay, and also the amount in your you deposited also will determine the commodity you can go for. For example, if you deposited on this Dana platform now, if you deposited 7,500, 10,000 naira, 15,000 naira, you cannot be able to trade gold, right? Because the margin that is required to trade gold, your money cannot cover it. That 10,000 cannot cover it. Okay, I think the minimum, the money, the amount you can have on your account to trade gold is about, you must have at least, I think, 30,000 naira or thereabout to place a trade on gold. Okay, on currency you need about 8,000, 7,000 to trade currency. Okay, that's why I advise us to deposit 7,500 at least minimum, so that you can be able to trade currency. But if you want to move further, you want to trade crypto, of course, crypto you must, I think, if I can remember, I think up to 50,000 or thereabout to place a trade on crypto. Okay, you need that, and that is the minimum 0.01. If you move up, your 30,000 cannot take you. So that is how it works. I will show you as I'm changing from one volume to another. You discover that the price will be going up. Okay, now that we're taking the position, we want to trade on using want to use USDPY, want to trade on it. So this is got into this position. Now you can see the next line is SL/TP. SL means stop loss, TP means take profit. Okay, stop loss means the minimum you can lose. Okay, while take profit means the highest you want to take your profit. The minimum you want to take your profit. Okay, that's what it stands for. That's take profit and stop loss. I personally I don't trade with stop loss, but please trade with stop loss. It will help you. It has its own advantage, it has its own disadvantage. Everything, of course, have its so, but me, Emmanuel, I don't trade with stop loss. Okay, I know some of might be asking reason. I can't tell you. I just place reason why. Okay, let me give you a reason. One of the reasons is that I do not trade with stop loss is that if I take a trade and I set my take profit. One thing about trade is that, of course, many times if you not go straight and hit your take profit, it will go down. So okay, it will go down. And when you're sure of that trade, okay, when the price started going down, and for example, let me give us an example. Let's take, for example, you enter a market at price 10. Okay, price 10 naira, that's when you enter the market, and you want to take a profit at price 20. Okay, and you set your profit at price, let's say you set your stop loss at price, let's say price 7, for example. Okay, you set your at price 7, meaning that you like I said, it's a minimum that you can lose, meaning that when price reduced to 7, the market should close against you. That's the meaning of stop loss. When you hit to price 7, the market should close against you. When you drop down to price 7, the market should close against you. So when you move to of course take profit, when you get to price 20, the market should close for you in profit. Okay, so when the price dropped to price 7, it should close against you. So at this point in time, when the price started going down, maybe the moment you enter the market, it started going down, and you're sure that you must take profit at price 20. You are very sure of it, and before you know it, the price will go down and hit your stop loss, which is price 7. You are out of the market. You've lost some little amount of money, and you did not gain anything. But when you did not set any of your stop loss, even though the thing went down to the last price, and of course when it goes down, before you know it, it will start coming up again and hit your price 20. That is the advantage of it. But the risk is that like I told us, you cannot determine the market. You cannot determine the price at which it will swing at any time. So it will be dangerous when you do not set your stop loss and the price changes from that moment you enter the market at price 10. It went down, started going down, and maybe you do not have enough money in your accounts. What happened? It will wipe out everything. You will lose everything. That is the risk behind it. Okay, that is the risk. Okay, but if you have enough money in your account and you are very sure that it will get to this, the price will get to your take profit, you can leave it. You might as well not set stop loss, and it will just go down. It will come up again. Okay, it will go down. It will come up again. So that is it. Though, but for money management, please always set. Don't follow me. Always set your stop loss. Me, I can take it. I can withstand it. I'm a risk taker. I can. But as a beginner, please use your stop loss. Okay. So that is that. So that's the difference between them. Of course, the other one is margin. Now that margin you see there, the margin. Okay, this is the margin. And this is the amount. Now this margin, it means that this is the amount. The $2 that is showing there, $2.1 is showing. It means that this is the amount that can hold the trade at that particular time. So if you do not have this amount, if the money in your account is not up with this amount, assuming is what is in your account is below these two, you can't. It will not even trigger. The trade will not go because the amount is not up to what is there. Okay, the trade will not go. It will not execute the trade. Okay, so that's the work of that one, of course. So that is that. Now this fee represents the fee of this broker. Okay, so that is that. So now that's the position. That's what this pending just simply means if you want the trade to happen in early time, in early price. Okay, if you want to trigger, for example, want to place a future trade, that's when you use your pending. So I don't use it. I don't do any future trade. I do present trade. Okay, so that is that. So now the next thing to do at this particular time is to click on enable this your stop loss and take profit. Okay, it has been enabled. You can see stop loss, you can see take profit and all that. So now you want to set your take profit. So after analyzing your trade with your trading view, you're now seeing where you want to enter the market. Okay, you're not seeing where you want to take your profit. Okay, you want to take your profit at this price. Okay. Now if you notice, maybe if you want to take a profit at 5.150.969 after analyzing, you've seen it. So what you now do, you just click on this where the road enter the point. Now you can adjust to the price that you want to, 150.969. Okay, that's all. You can see the next thing at the bottom. You can see where the road take profit at the bottom. Take profit price. You can see it's dancing 2.0. That means that is the amount you will get when you take profit at that price at the top, 150.969. So the moment when you get to 150.969, $2.02 will not be your money. That will be the money you got from the trading. Okay, that's your profit you got from the trading. That's what will show you there. Okay, now that is under 0.01 lot size. You can see lot size at the top. Okay, let me show you the lot size. You can see the lot size. These are the lot size. Okay, these are the lot size. Look at them here. These are the lot size. This area is where you determine your lot size. Okay, that's where you determine your lot size. Now, this amount, that amount I showed you, it can see it's dropping because we've not entered, so it will drop. Okay, now if you want to, it's on this amount is for 0.01. If you now increase it from 0.01 to 0.02, okay, you can see it has increased to 0.02. I've increased it, you can see what is there. It has moved to 3. Are you seeing? The take profit price has moved to 3. Remember I told us that the lot size determines how much you will make in the market. Okay, it has its own risk. It has its own risk. The risk you will face on 0.1 is different from the risk you face on 0.2. The more you go, the more the risk. Okay, the more you move, the more the risk. Now let me take it back, and there's something I need to show you. Now this is the minimum, like I said, is 0.01. The take profit is what? Is 2. Now look at the risk, look at the margin. The margin still remain at 2.0. You can see the margin still remain at $2 like that. Now let's increase to 0.02 and see what will happen. We have moved to 0.02. You can see the margin has increased to 4. You see, the margin has increased to 4. Then the price, your take profit has increased to 3. You see, that's how. Now the risk has increased to 4. So what that means is that when you put the trade, which means you need $4 for the trade to go on. So what that means is that the moment you place your trade and the trade started going down, okay, when the trade started going down, it will drop up this $4. This $4 will move, as in it will use the $4 for your trade. Okay, that means whatever you have on your balance will reduce to 4. Whatever you have on your balance will reduce to 4. Okay, that's what it means. Whatever you have on your balance will reduce to 4. Okay, and the moment it reduces to 4, it will start the market will start moving. So you need that money to sustain the market, and the money is not going against you. It will be reducing. It will be reducing until, and the more it goes against you, before you know it, it will eat up your money. Your money will go off. So that is why you need enough fund. Okay, the more money you have, the more lot size will determine the kind of lot size you will use. If you have small money, please use 0.01. As a beginner, use 0.01. Even if you have so much money, as a beginner, use 0.01 until you master the trade. When you master the trade, you can use big lot size. Okay, you can use big lot size. When you master the trade, you can now analyze and take your trade. Okay, this time around, you're not gambling. You are what? You are doing business. You're not gambling. You're doing business. Forex is not gambling. Please, some people see it as, some people don't know. They say it's not gambling. It's business. This is a business they do worldwide. Banks, everybody, international marketers, they do it. So it is not gambling. All right. So you can see the difference. Let's move to 0.01. If you move to 0.01, you can see it has increased. The margin has increased to 20. Okay. So if you deposit $5, you can't be able to use it. You can't use 0.01. You can't even place a trade. It will not even go through. So you can see, and you can see your take profit has increased to 23. That is the power of that is how volume works. Okay, if you move to 1, if you click 1 now, you can see it has moved to 200. Your margin has moved to 200, which means you must have up to $500 or $300 for this to work. You can see it 200. So your take profit, you see it has increased to 219 or thereabout. So before you can place a trade using one as your lot size, you must have about 300 or more. So you see, so that's why I said it's better if you move to 2. You can see the more you move, the more profit, your profit will be growing. You can see your profit have moved to almost 400. Your margin also will increase. If you move to 5, the same thing. 1,000, your margin, your profit 1,000 for just that trade alone. So that is why I will advise us not to use big lot size when you're just starting up. Okay, you can see, okay, you can even go further. As I'm going further, you can see 5.17. Like that, it will be moving up. Okay. So when I want to trade, when I started, okay, I started with 250,000 naira. Okay. So and I started using I started using 0.05. No, I started using 0.01. No, I started using 0.1. Yes, 0.1. Which was a risk I took when I started off. So after some time, I Ojukokoro, my big eye, I said no, let me use 1. I tried 1, just 1 once. I saw the risk, I ran away. So I started using 0.05. Okay, so you need to be very careful the one we use. So as a beginner, we use 0.01. So that is how lot size works. So you have to understand it very well. This part of money management when it comes to trading. So when you order, like I said, your stop loss is very. You can use it also. You come down here, you check the current price. Okay, you check the current price. When you set your stop loss, check the current price. You take it down. Okay, you can take it down to. You take it down to 300 or thereabouts. Okay, so after all that, after you're done with all that, then you now you place your buy position and take your order. See, when you go, you can see your order has been taken. That's how you place your order. You can see it's going. It's showing green. So the moment it's green, it means you are in profit. If it is in red, it means you are losing money. If it is in green, you are in profit. So that is how it works. If you are in green, you are in profit. If it is red, you are losing. Okay, so that is how to place a trade using this platform. Okay, if you want to use other platforms, there's other ways to do it. Okay, there's another way you can do it. Okay, let me show us another way to take a trade on Meta 5. Okay, this is my Meta 5. Okay, this is my Meta 5. Okay, so now I want to place a trade on Meta 5. So what I will do is that I will just go to trade. You can see the down, you see trade, you see history and all that. Okay, so what you will do, you go to trade. Okay, on trade, you click. If you look at the top right corner, you see a plus sign. You see a plus sign there at the top right. You click on it. Okay, when you click on the plus sign, okay, now if you want to now locate the trade you want to take, if it is on currency, you can see it's there. You can scroll down, you see various commodity there, everything is there. Gold is there together. So you just check the one you want to pick and you click on it. Okay, Of course, you click on this X here, this dollar sign at the top right for you to locate that. You see there, you click. So you now determine where you want to take your profit. Okay, determine where you want to take your profit. Okay, after analyzing with your trading view, like we just did, okay, analyze your trading view. The next thing you will do is to come down here. The way you take your profit, you might have seen it. Okay, you must have seen you write it down. You come down and write it out here. 0.5 point, let's say 700, for example. Okay, then you can see the other one is your stop loss. Okay, like I told us, we should always learn to use stop loss. Okay, so you come down here, you can say 0.5, let's say 580. Okay, then you now click your, let's see, buy. That's how this is it. That's how to do it. Okay, if you go to chart, you see your okay, you can see it went down. You can see what I'm telling you. We just place a trade now. It has hit the stop loss. You can see it has hit the stop loss. The stop loss is 0.50.58. It has hit the stop loss. So that is, you see the danger of using stop loss. It's not danger anyway, but it's a minimal. How much did I lose? That's $0.13. It's a minimal, so it's a small money. Okay, so let's do another one. Let's take another one. Okay, let's take another one. 0.5.700. Then I'll put the stop loss. So that's why another thing again, once you set your stop loss, don't set it very close to your current price, as the price you are when you're about to take the trade. Take it, make sure you give it room. You give the trade room to operate. Okay, to breathe. Okay, I can do it to 5, let's say 500, 510. Okay, 500 or 4. Okay, let me say 450. Okay, I'll say buy. Okay, so that is it. You can see the trade is showing there. Okay, if you go to charts, you can see the trade is already on the chart already. It's already on the chart. So that is how to take a trade. Okay, on Meta 5. I've showed us how to take a trade on this particular one. You can see the trade is still going. So that is that. You can see it's red now. It means that I'm losing. Okay, it means that I'm losing the trade. So that is that. Thank you.